GM. Welcome to Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. Don't get caught in the hype cycle. I'm Jay Bird, joined by my co-host Kyle Reedhead, and we believe that permissionless tech is going to change the world. That's why we're carving a path for doers to confidently build and invest in Web3.
Big things are happening in the Web3 space today. Farcaster is now open to everyone. It is what's called permissionless tech, as Jay just mentioned. We're going to break that down and what that means. Lens seems to be following suit as well. So there is a competitive rush now in the Web3 social world. It's really heating up. Speaking of things heating up, the SBF trial is heating up, and there's some just wild and wacky things coming out of that. So we're, of course, going to update you on what's going on there. We'll do a bit of a market watch, but we're going to keep it short because, I'll talk about it in the market watch section. M&A is going on in the NFTs world. You know, that is a world that's just been craziness. And so we're going to add to it with some mergers and acquisitions, which is fun. We'll talk about that. Pudgy is continuing to be the focal point of every roll-ups that we have. They're just doing wonders, and it's great to see. And then we'll talk about Opensea, Zora, DeGods. Are they coming back? And then, of course, Blur, which we haven't talked about in a while. And, you know, hopefully we'll stop talking about them soon. But we've got to talk about season 2. So much to talk about today.
I am super excited to announce the on-chain gift shop. This is a place where you get rewarded every week with prizes worth hundreds of dollars just for interacting on-chain. This is our biggest initiative yet. Now, I bet you're wondering, what the F is the on-chain gift shop? Well, let me explain. Since we first launched Web3 Academy over a year and a half ago, our goal has been to help you capitalize on the next big phase of the internet. We've spoken to over 100 industry leaders, and the consensus is clear. To truly capitalize in Web3, you must dive in and interact on-chain. Experience is the best teacher, and that's why we're launching the on-chain gift shop. Straight up, at the on-chain gift shop, you get free stuff for interacting on-chain. Why? Because doing on-chain should be celebrated. We call that a W. So every week, there's 2 ways to win. 1, there's a weekly cash prize. All you have to do is collect the Web3 Academy newsletter, and then you can enter the weekly cash prize, and we'll have cash giving away every week that could end up in your wallet. Number 2, there's the weekly raffle, where each week we'll be giving away hundreds of dollars in prizes that you could win. This week, we've got some great things in the raffle. We have 20 mystery boxes. We have 3 Web3 Academy hot off the press Build in the Bear t-shirts, which are fresh AF. We've got a one-on-one call with yours truly, where I will consult your business on how to move into Web3 or how to get started on the next steps of your startup, and so much more. So visit onchaingiftshop.com right now, or check out the link in the show notes to learn more about how you can get free stuff for interacting on-chain.
That's going to be a great episode, Jay. But before we do that, let's talk about some gratitude. What are you grateful for?
Yeah, I'm grateful. I'm going to take 2 things and squish them together here. We recorded an awesome podcast 2 days ago with Zeneca. It hasn't aired yet, but it'll be coming out in a few weeks, so look forward to that. And I'm grateful for something he said at the end of the podcast. He shared a quote with us. I don't remember. It was in Latin. I don't remember the Latin version of the quote, but the English version, it was, if you want love, love. And it was a great reminder of the best way to find love and to grow love is just to love yourself and to spread that love. And the reason I bring that up is because I have this new son, Jack, he's been sick this week. And when you're like 4-month-old is sick, they're like so useless and like in need of love, right? And you're exhausted because you're not sleeping. Like I'm barely sleeping because I have to like stay up and like hold him and comfort him. And it's incredible how it's like twisted. It's like the middle of the night. It's like 3 a.m. I haven't slept. And I'm just like staring at it. I'm like, oh, I love you so much. Like there's just something so powerful about feeling that love for a child and for somebody else. And like when you feel that, it's amazing how it like makes me feel okay. And like I don't need sleep. So yeah, thanks to Zeneca and to my son, Jack. Just spread more love. And when you do, it just gives you incredible energy.
I love that. But Jay, you still need sleep. Okay. You got to get some sleep.
I'll get sleep, I hope, someday.
It's Sleep when you're dead. That's what they say. I am grateful so in Canada, it was Thanksgiving over the weekend. And so I got together with my family on Saturday. Then I got together with Heather's family on Sunday. Heather's my girlfriend. And so just spent the whole weekend with family and just kind of bonding, eating really good food, playing a lot of euchre, having some wine. And yeah, it was beautiful. I mean, the weather is now very fall-like. It's much colder, but it's a nice time of the year. It's a beautiful time in Canada for sure. I realized I haven't been in Canada for Thanksgiving since 2018. So it's been 5 years since I've spent Thanksgiving with my family. So it was a really, really nice time to be with family this weekend.
Those weekends in the calendar every year that bring family together are so important. And I feel like through our 20s, now Kai's in his early 30s. I'm in my twilight years of my 30s. You appreciate them more, right? You come back like in your 20s, you just want to travel. And now, I really appreciate every chance I get to spend with family. All right, Kai, as we always do to start the episode, what is going on in the markets this week?
Yeah, so the big data point from the markets was this morning, the morning as we record this Thursday, but the CPI numbers, the inflation numbers in the US came out. And I think people are a bit confused on what these numbers mean, but inflation remained the same. So it was 3.7 last month, and it was again 3.7% this month. This is the year over year change. And so people are worried, okay, inflation's not going down like we thought it was. It had gone up the last couple of months. Like, this is really bad. Now we can't lower interest rates. We can't print money. Like, this bull market's never going to happen. The world is ending is where most people's sentiment is. And actually, if you look at sentiment, institutions are more underweight than they've basically ever been. Sentiment in terms of just people's expectations of where the world's going are just terrible. Have the war with, Israel and Palestine. And so there's just it's bad out there. Mm-hmm. But the good news, I'm an optimist as per usual, optimistic. And so the good news, though, is if you look deeper at the numbers, so although CPI, so your normal inflation that the US reads, was the same, core CPI, which is, I talked about this I think last week or the week before, core CPI was actually lower. It was 4.3%. Last month, it's now 4.1%. And so that has consistently gone down and down and down for months and months and months. Now, core CPI, which I've spoken before, I'm not going to go too in depth in this because I've actually been doing a lot of research on macro over the last couple of weeks. And some of the people that I follow a lot and trust a lot in this space that have guided a lot of my decisions and a lot of just my research, they have put out a lot of stuff in the last couple of weeks. And so what I'm going to do is I'm actually going to put together a pro report next week breaking down everything. I've got 40 charts. I was playing around with it this morning. I've got 40 charts for the pro report next week, breaking down everything: unemployment, inflation, interest rates, liquidity, technical analysis, sentiment, the whole thing. If you've taken an investment course, you know that you got to look at these from all the different angles. I've got it all, and I'm going to put into one pro report. Hopefully I can fit it all in one. Honestly, it might need to be two. It's big, but there's a lot. So I'm going to cover it mainly there. But the key thing to understand right now is that core CPI continues to go down. This is what truly matters in these moments. Core CPI is your shelter, wages, and these make up 70, 80% of total inflation. CPI didn't go down along with core CPI because commodities are starting to have a bit of a boom. And that's because we're starting to smell that growth is going to come back. And so companies need to start producing things again, which means they need to start buying things. So commodities start to go up. But those are only 15% of inflation. So we're sort of at this moment where core, which is shelter, that is really starting to come down, but it's just turning over. So it hasn't really came down yet. And then the other things outside of core, we're going down like crazy over the last year, but they're kind of on this rampant pace upwards for a little bit. But it'll be the course that'll bring it down, and we'll continue to bring inflation down. So I expect inflation to be much lower than the 2% probably by the end of this year. And even though no one is saying that. And so in the pro report, I'm going to explain why. I'll show you a ton of charts. But to me, I still believe macro looks very good. And I know that's not what most people think, but that's my opinion. Can't be right every time, but I'll show you why in that pro report. The other good news that's coming outside of that data was another thing that came out. This was yesterday, which is back on the Bitcoin spot ETFs. We said that they were delayed until January, but ARK yesterday just filed an updated version of their spot Bitcoin ETF prospectus. So they've made a bunch of changes based off what the SEC has asked them to do, and they've now put that in. And so if you look at what are the changes they've done, here's a few key points of what ARK had to change. And the expectation is that BlackRock and all the others will do the exact same thing. And so those should be coming in the next, let's say, a week or so as well. So first was they had to really explain further on how the assets will be custodied. The key thing the SEC wanted, and this is likely because of FTX, is that the wallets that the Bitcoin is held in cannot be commingled with corporate or other customer assets, right? So, I mean, this was the big issue that happened with all the big centralized exchanges. And so they're really, really focused on making sure that it's not possible that the company can use these assets for anything else. So that was a big one. The other ones were a little bit interesting. They were more of like disclaimers that they had to put, which is the actual or perceived use of Bitcoin and other digital assets in illicit transactions may adversely affect the Bitcoin industry. So that was a line that they actually had to put in there, basically disclaiming that maybe there's going to be illicit transactions or things, and that could impact the industry, and thus Bitcoin's price could go down. Why they need to put those things, like, of course, if there's any illicit activity in any business ever, of course that business is probably not going to do well. This is how politics work. The other thing that was interesting is they made them put mining operations, so Bitcoin mining operations can consume significant amounts of electricity, which may have a negative environmental impact. Now, this is actually, it's somewhat true. Bitcoin uses a lot of energy to mine. However, a lot of it has moved in the direction of renewable energies. And actually, Bitcoin is one of the leading innovators of renewable energy because it's more cost effective. They can use renewable energy. So they're doing things like getting energy from volcanoes, right? They're doing from like oil and gas things where they like burn the gas. They're using that to then use that energy to mine Bitcoin. So like there's a lot of innovative ways coming out of Bitcoin. So it's actually a net good is what the like debate is here, is that there's actually a net good for the world in terms of this, especially as it becomes, I think we're now over 50% renewables for all electricity for Bitcoin. But people can't really think of the future stuff again, of the innovation stuff. They just think of the moments of right now as, hey, it uses a lot of energy. It must be bad for the environment. But they don't kind of see through it. And so this is something, again, I guess they have to disclaim. Why? I have no idea, but that's just what they have to do. So anyway, this is a couple of the key things that were changed. And again, predictions seem like this is all really good news. It's not a lot of difficult things. ARK was able to do this within 2 weeks. They were able to get the new application out there. So others will probably come, and hopefully, this is finally enough for the SEC to finally approve. Let's see where things go.
I'm excited about that pro report you're going to write next week, Kai. That's going to be a really good one. I think the main thing I have to say about Market Watch this week is I was talking to some friends that are in the TradFi space, and they were very, very negative sentiment. And that's always when I get excited. Like, buy the fear, sell the greed, right? When you're talking to people and everybody around you is negative, down sentiment, it's all bad. Remember that sentiment lags. Sentiment is always lagging behind what is actually happening. And yeah, those things, it's funny how those things actually get me excited. I'm like, oh, you think it's the worst it can be right now? Great. This is what I should be buying.
Well, and I'm writing this pro report next week because I think we're at an inflection point. The last time we were at this inflection point was in January of this year. And in January, this is when we launched Pro, and we were yelling, guys, this is the moment. Like, I know it seems really bad out there. Everyone's so scared about everything. Buy. And then what happened? Equities, crypto just ripped for like 2-3 months. It's come down a little bit and it's kind of chilled out. Equities have actually continued to like kind of grind up a little bit, but it's been stagnant for months and months. And we said at some point that's going to come back. And I think the moment is coming. I'm going to show you guys why with all these charts. But the reason I'm doing this is because I feel like what happened in January, we're at that same moment. And so it's a big opportunity. So make sure to check that one out.
I love it. All right. Let's jump into what's going on over at Farcaster launching, the SBF trial, and so much more. But first, we'll just take a minute to hear from our sponsor. Modern newsletters are built on Paragraph. That's right. Paragraph is a brand new newsletter platform that combines the best parts of Web 2 and Web 3 to supercharge newsletters for both writers and readers. Build a community, not just an audience. Paragraph uses blockchain tech to allow readers to collect and own the words that matter to them. This takes reading a newsletter to the next level. With Paragraph, readers can mint, collect, and show off quotes from their favorite newsletters. This opens new possibilities like creators sharing revenue with fans. I also love their new feature, Paragraph AI. This integrates GPT-4 natively in Paragraph to create, edit, and improve your writing effortlessly with one click. And guess what? We at Web3 Academy are on board and have already moved our content over to Paragraph. We believe this is the future of newsletters because of the profound engagement it creates between creators and fans. So, whether you're a creator, writer, or an avid reader, it's time to check out Paragraph and capitalize on the opportunity of being early. Welcome back. All right, first up on today's news is Farcaster is permissionless. Kai, what's going on?
Yeah, so this is huge. Farcaster, we've talked about a lot, so hopefully you guys know what that is now, but it's basically a social protocol similar to like Lens protocol, but they have their own variations. They've been working on it for about 3 years now, and finally it has gone permissionless. Now, what does that mean? Permissionless means anyone can sign up. So previous, you had to have an invite, right? Same with how Lens works. You need to be on the wait list to get it or have an invite. And so Farcaster has been like that for a while since they've launched, and finally anyone can sign up. The way you sign up is you go to any of the clients, so the apps that are built on top of Farcaster, like Warpcast or I think it's called Flinky, and I don't know, there's a bunch of others. But anyway, you go to those and you can just basically sign up like you would signing up, for your Twitter account, et cetera. But what you're actually doing is minting an account on Optimism. And I think you pay $5 per year to have this account, which will do a good job of removing most bots. And then also that goes towards the protocol, which then can be used kind of like public goods funding sort of thing. And so now that that's possible, the other thing that's possible from going permissionless is clients can build on top of the protocol without the need for help from Dan Romero and the Farcaster team. And so any developer in the world can literally build their own client, sign up their own users, and launch it. And it's quite simple. There's actually a video we have up on the screen here of a developer showing you how to do it within 10 minutes. So now, obviously, you're not going to build a great app in 10 minutes. But the cool thing of this is if you wanted to build a social media app not using Farcaster or like Lens protocol, if you weren't using social media on blockchain, let's say, not only would you have to build your own app, you'd have to get your own database, and then you'd have to find all your own users and sign them all up and store all that user data. With Farcaster, you don't have to do that at all. You just have to build an app. Now, the users that are already on Farcaster, maybe that they're using Warpcast or something else, they can just interoperable, like just easily go over and use your app. They don't have to create a new account. They can share content. Like they don't have to do anything, right? They just literally go to that page and log in as they would normally, and they have it. They don't have to create something new. So you don't have to like start net new and find your customers. Now, of course, you still need to get people to come over to your app versus other apps. So there's still marketing needed. It's not that easy, but a lot of the functionality and a lot of the costs associated with like getting new users, getting them to sign up with all that friction, that is basically all gone. So it's really, really cool what this is going to do for social media. Already you have Warpcast, which is the one that Farcaster built. So the team who built Farcaster have their own, what's called a client. That's the app. They have Warpcast. That's the most popular one that many people are using. But there's already other clients that have launched as well. So Flink is one that is basically Reddit. It looks and feels like Reddit, but you're using your Farcaster account. And so I can go and I can use Warpcast, which is kind of like Twitter, but then I can go over to Flink and I can use my account more for like the Reddit style. And what's interesting is since they've launched this permissionlessly, which happened on Wednesday, there's now hundreds of users signing up per hour. This chart we have up on screen is a little bit outdated now, but 25% of new signups have come from this new Flink app. Now, why would that be, right? Warpcast is the one that has all the like Twitter followers. People know about them already, right? So why is Flink doing such a good job? And the reason is Warpcast is made for people that aren't necessarily already on chain. So it's an easy onboarding experience for new people. Flink, however, is made for people who are already on chain and already have a wallet. And you can just connect your wallet in. And so Warpcast is sort of like creating a wallet when you create your account, which when you hear our Privy podcast that comes out, I don't know if it's next week, you'll see kind of the difference here and why you would do both. But Flink is like, it's like an onboarding experience for crypto natives, and then Warpcast is for non-crypto natives, which is quite interesting. And so again, we'll have clients or apps on Farcaster that will work for all sorts of different people, and we'll have many different types of activities. So anyway, this is a really big deal, I think, for Web3 because we need our own social. Twitter's great, and I'm sure we're all going to use this for a while, but we need one that is permissionless, that is decentralized, that has all the fun and cool things that we like to do in Web3, and finally we can do them over there on Farcaster. Now, there's still plenty to be built out there, but this is a huge, huge milestone, I think. Lens Protocol is the other one. We talk about them all the time. They've been partners with us for over a year now. So we're really excited about what Lens Protocol is doing as well. And the cool thing is we tweeted out it's happening because Farcaster went live yesterday permissionlessly. Lens Protocol has tweeted out, we're going to start opening up Lens Protocol slowly to a more wider audience. And so you can go and connect and you can join their waitlist as well. They're beginning to kind of let more people on, which is exactly what Farcaster did before they opened fully. They were in beta. They didn't let anyone in really. Then they like slowly started to let more people in, and then boom, it was like everyone. And Lenses seems like they're doing the same thing. They've been closed for a little while now. They were fixing up some things. Lens V2 launches, I believe, somewhere around the end of this month. So my guess, again, I don't know, but my guess is that when V2 launches, soon thereafter, they will launch open to the public. One, because the tech will be better with V2. Two, because, well, Farcaster's done it and they need to make sure they don't fall too far behind. So lots is happening here in the Web3 social world, and it's very exciting.
Man, it's so exciting. I think one thing that this really makes me think of is going back and, history repeats itself. We always say that, right? Or history doesn't repeat itself, but it rhymes. Sorry, that's the quote. But if you think about the start of the internet and the original social media apps were much more open. Think about Twitter used to have an open API and lots of businesses could build on top of Twitter. And then what happened was there became basically a war for users and user attention, and Twitter closed their API, essentially rugged a whole bunch of businesses.
Yeah.
And that was sort of that inflection point at which we went into like the last 15 years or so, maybe the last decade, where we had all these closed ecosystems and we became the product user, and everybody knows that story. And what is happening now with Farcaster and with Lens and with DSO, who we had on the podcast a few weeks ago, great episode, go back and check that out, is they are rebuilding the infrastructure layer, the protocol layer for our social media. And the thing is, the way they are building it, they will never be able to close their ecosystems. And I don't think we really grasp what that's going to mean. Right now, it doesn't really mean much because we're still all on X and Facebook and we all spend time on our Web 2 platforms. But in 5-10 years, when we've all moved over to these new platforms, and I guarantee we will, and the main reason I guarantee we will is because innovation, where's the innovation happening? It's not happening I guess Twitter is innovating because Elon is probably one of the craziest innovators in the world. So maybe he's the only Web 2 guy that gets this, but I don't believe that any other Web 2 companies, big companies, are capable of innovation. They're just capable of ensuring that their stock price, satisfies shareholders. That's their only objective. And so where the innovation is in these small teams, in these back offices of like hustlers and startups who are trying to do new things. And as Kai said, because of this permissionless tech, you can do new things at a pace that you never could before.
And social on blockchain means that you can also monetize in different ways. And so creators are going to go where creators are treated best. And I mean, one of the reasons why Twitter started to kind of have this resurgence since Elon took over is he's focused a lot on paying creators. So a lot of people want to go back there and start creating. And so with blockchain, though, as we've talked about plenty of times with, things that Lens is doing, and I mean, even things we're doing on our newsletter with Paragraph, you can monetize in ways that just are not possible with, centralized databases, essentially. And so I think the combination of like freedom of innovation, because APIs are fully, open and permissionless. And so you can build whatever you want on top of these things, which is really cool. You have like the Legos of social media, and then just the freedom to monetize in whatever ways you see fit as a creator. There's just no doubt in my mind we go this way. Maybe Twitter or X. I mean, I just read the Elon Musk book, which is an incredible book, by the way. I forget who Walter Isaacson. Yeah. Really, really good book if you want to learn more about Elon and all the things that he's doing. It's crazy. But actually, when he bought Twitter just before, he was talking with his brother, and they were strategizing on how to build a social media app on blockchain. And so he actually has his cousins looking further into this. And so when they bought Twitter, like, hey, can we move this thing on chain? So talks about it in the book, which pretty cool. So again, he was like, okay, we can't, is basically what he said in the book, was like, it's not ready. So it's not going to happen. But he sees the reason why it's better, why social is better on chain. And so maybe the tech's not there for Twitter to get on there anytime soon. But at some point, I think it moves over to one of these protocols, or I don't know, there will be blockchain integration at some point for sure.
Yeah, exciting times. You know who is not an exciting time for right now is our buddy Sam Bankman-Fried, who's just we're 1 week into his trial, and we said we'd keep you guys updated every week, and it just keeps getting better and better. I think it's pretty clear. I don't know if you guys have been following this trial. It is very clear that Sam Bankman-Fried broke the law and knowingly broke the law. When you look into this trial, it's almost as if his lawyers are completely hopeless to defend him. They don't even have a leg to stand on. They're basically just trying to confuse the jury. I would say that's the only hope they have, is like confuse the jury as to what is crypto and how does it work. And Sam Bankman-Fried basically didn't know what he was doing, plead ignorance essentially, right? And hope that the jury goes that way, which there's just no way they're going that way. So this week we had 3 main people take the stand this week. We had Adam, I'm going to butcher this last name, Yedidia, I believe is his last name, an old friend of Sam Bankman-Fried from MIT and an early member of the FTX team. Then we had Gary Wang, co-founder of FTX and Alameda. And then we had Caroline Ellison, co-CEO of Alameda, and also Sam Bankman-Fried's girlfriend at the time. On and off girlfriend, although when she took the stand, it was pretty clear that they weren't actually boyfriend, girlfriend. They just like slept together on and off. I feel so bad for her that she had to like talk about that on the stand. What an awful situation to be in. So let me give you the highlights of these 3 testimonies. Here's the TLDR. Sam Bankman-Fried's going to jail for a long time. First, Adam Yedidia talked about living in Bahamas with Sam Bankman-Fried. Sam Bankman-Fried had a $35 million condo that he was paying for. And there was 8 different people that lived there, all working at FTX. And basically Adam Yedidia painted this picture of this lavish, ridiculous lifestyle that Sam Bankman-Fried was living and allowing everyone else to live because he was making so much money. He didn't care about anything. And it obviously did not make Sam Bankman-Fried look like a responsible CEO. It made him look like a young 20-year-old who just wanted to like party and have fun. And then Adam Yedidia talked about how at one point he was asked to fix a bug in the FTX Alameda contract, or the system that connected the two of them. And when he was asked to fix this bug, he was asked to fix it because at the time this bug was showing that Alameda owed FTX $16 billion, which the relationship between Alameda and FTX, Alameda should never owe any money to FTX. They should never have been able to go negative in their FTX balance, but they did. And so Adam Yedidia went into this bug and he's trying to like figure out what's going on, and he fixes it. But the fix was that, oh wait, Alameda owes us $8 billion, not $16 billion. And so he found this out. He went to Sam Bankman-Fried. Sam Bankman-Fried said, don't worry about it. It's no big deal. Give me 6 months to 3 years and I'll fix this, which is a bizarre timeline. And yeah, Adam Yedidia at this point realized that he was breaking law and he actually left FTX. So that was the first thing that happened. Then Gary Wang takes the stand and he has 2 smoking guns. First, he explains that Sam Bankman-Fried directed Gary Wang and the other seniors to enable Alameda to have special privileges with FTX. And what was included, and there's many things, I think there was like 4 or 5 things within these special privileges, but the main one was that Alameda could withdraw funds from FTX, unlimited funds. Now, the same day that Gary Wang claims that Sam Bankman-Fried said, set up these special privileges, that same day, Sam Bankman-Fried tweeted, or maybe it was like the next day, this is back in 2021, same day he tweeted that Alameda had no special privileges and was just like another customer to FTX, when in fact, Alameda could now basically withdraw unlimited funds from FTX, which it continued to do to the tune of billions of dollars. And then the other thing that Gary Wang talked about is on the FTX website, like right on the homepage, one of their selling features was that they had a insurance pool. So if any FTX customers' funds were at risk, FTX claimed we have a $100 million insurance pool to cover any of our customers' losses. Well, Gary explained that this was a complete lie. There was no insurance pool. Not only was there no insurance pool, this number on their website was a dynamic number. So the insurance pool changed as FTX had more customer deposits. The insurance pool grew accordingly. And Gary Wang explained that there was just a simple piece of code in the background that basically took FTX deposits, multiplied it by 7,500, and then divided it by 1 billion. And that gave the constant number on their website. Like, just a complete lie. And Sam Bankman-Fried knew exactly what he was doing. And then last up, Caroline Ellison took the stand, who was Almeida's co-CEO and SBF's girlfriend. And I mean, basically she just flat out said that Sam told me to commit these crimes. And she knew both Gary Wang and Caroline Ellison have been cooperating with the DOJ for months now. And both of them, in their testimonies, they are admitting to crimes. So they also are now going to have crimes against them. They are guilty of these crimes because they're fully admitting it on the stand. But they obviously have deals with the DOJ because the DOJ is focused on taking down Sam Bankman-Fried. So she basically said, he directed me to commit these crimes. And even though she was co-CEO of Alameda, she says that she was just a puppet. It was Sam Bankman-Fried. And you can imagine that, right? Like, who in their right mind hires the girl or the guy that they're sleeping with to be the CEO of one of their companies, right? Sam Bankman-Fried, obviously co-founder of Alameda. Like, you hire that person if you want control over them. You don't hire that person if you want them to actually go run your company. Right. So she talked about she was not the one in control. And she also talks about how Sam Bankman-Fried, when their investors started to come to FTX and say, hey, we need some of our capital back, we need some of our loans back, Sam said, we can't do that right now. And so some of these investors, Gemini being one of the biggest ones, asked for $500 million of a loan back. And so Sam Bankman-Fried directed Caroline Ellison to make 7 false balance sheets, totally fake balance sheets, and then send them to different investors. So every investor got like a different fake balance sheet. Like, is there anything more clear to breaking the law? Like, just ridiculous. And not only were these things happening that I just mentioned, something else came out in Gary Wang's testimony. Kai, what happened here?
Yeah, so this was crazy to me. So we know that this whole thing fell apart because basically FTX was leveraging customer funds and they didn't have enough, right? The prices kept going down, so they lost it, and bye-bye FTX. But what happened in 2019 is the same thing. They were taking customer funds, they were leveraging it, but prices were not amazing in 2019 either. And so they were going to basically get liquidated on their capital. And so what they did was Sam Bankman-Fried took the FTT tokens, which is essentially equity of FTX, and used that to cover the collateral on customer funds. Now, luckily, at the end of the year, prices went up in 2019 and the markets did fairly well during that time. And so he won that bet, right? He went literally all in on customer funds plus equity of the entire company, went all in, won it. He was cleared, all was good. But then he did it again in 2021. And this time, come 2022, there wasn't enough tokens to, cover that collateral. There wasn't enough equity to cover that collateral, and he lost. But that is insane that he has done this more than once. Crazy. I never would have thought that. Like, typically when you make that big a mistake, if you get out like clean on that one, you're like, okay, I'm never doing that again. Yeah. SBF, no, he's absolute insane.
Insane. Well, we've got many more weeks of this trial. We will continue to keep you updated every week. Let's go over to NFTs and what's going on in the NFT market right now. What's been happening over the last 6 to 12 months as a result of the bear market is a lot of NFT projects are struggling, right? They basically raised a lot in 2021 or early 2022 before everything crashed, which was great because they sold an NFT. Great. You got a whole bunch of capital come in, right? But then since then, they have not been able to generate any more revenue because royalties went to zero and they don't have another product. Most NFT projects have just tried to either airdrop or mint another NFT as another product, which we've seen with Azuki and others, how poorly that goes. Most have had to do significant cost cutting, right? They built teams when they raised so much, they sold their NFT, and now they're like constantly cutting, which is not a good situation to be in. Most have not been able to demonstrate product market fit because they just have a bunch of users who expect a number go up, but don't want to pay more money. They're like, they already bought in, they already paid their money because they think they're buying equity, not a product. And where does that leave them? Most NFT projects are either out of cash or they're running out of cash in a matter of months. So it sort of leaves you in two positions. If you're an NFT project founder right now, you either need to raise more money or you need to explore the sale of your company.
No one is funding NFT projects right now.
Exactly.
Funding across Web3 is down. If you read our newsletter, I think it was yesterday, but funding on NFTs is zero.
So where does this leave is basically leaves you in a tough position if you're an NFT project founder and you're not Luca Nets. So there's been three things that happened. This basically makes we're in a pretty ripe scenario for M&A to happen, right? When you have a whole bunch of companies that have some sort of asset, community, IP, those are usually the two main assets that most NFT projects have, and you don't have any funds to continue to operate, well, you try to either sell or find somebody else to merge with or do something like that. So we've seen three happen this week or in the past few weeks. First, Boss Beauties acquired BFF, which makes a lot of sense to Web3 communities focused on raising up women through using the power of blockchain to do so and creating media and education around that. Boom. Merge those communities. Awesome. Makes a ton of sense. We don't know the details of that deal. It was a closed door sale, but it was an acquisition is what we understand. Next, Gutter Cat Gang, which was a leading project at one point, was not acquired, basically given to a community member. So Gutter Cat Gang, which was a successful project, fell off the map. A community member, a very active one named Noah, stepped in and said, you know what? I'm going to take over this. I will take over this project. A lot of these founders are young and just want out. They don't want the stress. They don't know what to do. They're not seasoned entrepreneurs. This is their first business. So they're just like, hey, take this off my hands and I'm happy, right? And so Noah has taken over Gutter Cat Gang. And I just want to mention Noah because there's this incredible tweet thread that he put out. He's at Maloa Dream on Twitter. If you can find him, we'll put a link in the show notes to this tweet thread. But this gave me very Luca Nets vibes. Like he's a seasoned veteran in business building. He previously built a SaaS company that he sold for $1.2 billion. And he's coming in, and this tweet thread is just amazing. It's just him being like, look, here's what we're going to do, and we're actually going to do it. We're going to focus on IP. We're going to focus on licensing. We're going to focus on creators and mostly our community and amplifying their use of the Gutter Cat Gang IP. And I'm going to build a business here because I believe that it can be done and because I know I can do it. And as a result, Gutter Cat Gang has actually gone up. The NFT floor has gone up quite a bit, which is interesting because we keep seeing people ask if my NFT project sells, and when Pudgy sold, same thing happened. Like, is there anything that comes back to holders? No, you don't own equity.
Just speculation.
It's just, but if there's a new leader in your company, and this is one of the main things Noah said was this Gutter Cat Gang just needs a leader that's out here talking about us and being positive and communicating to the public what we're doing, right? Whereas so many of these NFT projects are just silent founders who are only in Discord and aren't really talking about what they're doing because they don't know what they're doing, right? So shout out to Noah on that end. The other thing that happened this week was Pudgy Penguins, Spencer Ventures, which is basically an investment fund focused on digital assets, NFTs mostly. They acquired 144 Pudgy Penguins from Sotheby's, which were part of the Three Arrow Capital liquidation. And this was also an off-chain deal, so we don't exactly know what the numbers are. It was speculated that it was mid six figures for these 144 Pudgies. But what's interesting about this is, so here we have a couple different examples of what's happening. We have one NFT project acquiring another, with Boss Beauty acquiring BFF. Then we have a community member taking over a project with Noah. And now we have an institutional investor coming in and buying NFTs in Pudgy. So you can see, and this is a theme that you can expect to see more throughout this year. We're going to see a lot more NFT projects looking for funding and trying to figure out how to get more investment. And it's going to lead to some great opportunities, both for the founders to get out, and also but for the existing NFT communities to get some new life and some new energy into their projects.
And if you want to know which ones those are that will get acquired, it's only going to be the ones that have a strong community. So if there is a community there that's fighting, and maybe nothing's happening in the company and the founder's doing dick all, but if the community is actually there, like hoping and they're not selling and they're trying to rally around it, those are the ones that founders or entrepreneurs are down to buy. Like, hey, there's already a community of 5,000 people that are excited about this and that are using the brand and their Twitter handles and blah, blah, blah. It's like, that's a great starting point. Instead of starting from zero, to get from 0 to 5,000 customers is very hard. And this is why Noah, for example, is like, yo, I've built businesses. I could start my own. I don't need Gutter Cat Gang, except for the fact that there's probably thousands of people already excited about that brand that already have them in their Twitter handles, et cetera. And he's like, instead of starting at 0, I'll start at whatever that is at and put 500K into it. And then I can make something happen. It's exactly what Luca Nets did, right? So that's a big boost to start from a few thousand versus 0. And so that's what these people are looking for. So if you see strong communities and you're looking to invest in NFT, that's the only play you have right now. Unless there's an NFT project that's actually building products, but like I have seen 0, except for Pudgy Parents.
other than Usual Labs and Pudgy.
Well, ones that people already know, like right. Things like Pudgy Net. It's like we already know they have products. So what you need is ones that people don't know they're going to launch products.
Exactly. Speaking about Pudgy, some exciting news out of them. Just keep on shipping. This week they announced that Pudgy toys are now available in Smyths, which is a large department store in the United Kingdom. So Pudgies, these cute little fat penguins, are flying across the ocean and going over to Europe, and you're going to start to see them in kids' hands all over Europe as well. Shout out to the Pudgy team for their continued expansion of their toy division. And then also Pudgy announced a partnership with Last Crumb, and they're making cookies. They're going to make Pudgy cookies that have your Pudgy penguin on them, and they'll be available for sale as of yesterday, I believe. And Last Crumb's a leading cookie company out of LA, if you're not in the US or you don't know about that. So yeah, Pudgy flexing their partnership muscles at the same time.
And if you're wondering why cookies, so these are just little cookies that are in a wrapper that have the Pudgy penguins branding on them. It says, this cookie makes me Pudgy, which is funny and cute and kind of hilarious. But anyway, who's going to use those, right? It's kids. Parents are going to put them in kids' lunches. They're going to go to school with them. And so now the kids have their Pudgy penguins at home that they've got from Walmart and what's it called, Smythe or whatever, or Amazon. And then now they're going to school with these cookies where people, you're sitting at the lunch table with all the other kids and they're going to see this wrapper Pudgy penguins. And now, again, it becomes a conversation in school. Other parents are seeing it. Maybe you bring it to your sporting goods and you give it to all the kids at halftime for soccer or whatever. And so it's just getting the brand in front of so many people in such an organic way.
Mm-hmm. And the amazing thing is this week, Pudgy became the third highest NFT project by floor. So we have Punks at number 1, Bored Ape Yacht Club at number 2, and then Pudgy Penguins at number 3, ahead of Mutant Ape Yacht Club, Azuki, Clone X, Doodles, Moonbirds, all of those, which used to be the cream of the crop. Pudgy has just, their focus on building great products and building revenue streams. No shit, Sherlock. That's what's led them to also raise their floor and become a leading project.
And by the way, the NFT industry looks identical to how the ICO industry was in 2017, 2018. There was thousands of projects that launched. 99.9% of them were complete shit. Founders just left, stopped talking, ran out of money, all the same things that Jay and I just talked about here with NFTs. And then there was the few that had strong founders that built something that was real, like MakerDAO and Uniswap and Synthetics that we all know today. But those were not clear winners in 2018. No one really knew what those were. They were in the mix of a bunch of random pieces of crap, ICOs that people thought were going to be the next big thing, just like we thought, I don't know, Azukis and whatever were going to be the next big thing. And so it looks identical. But what will happen is a market will come back. It doesn't mean it will be the same market that we just saw. It might not be PFPs and it might not be monkeys and whatever. It's going to be very different. But a few of the ones from that last cycle will make it back and will exceed all-time highs from previous. That's just how these sort of innovation cycles work. So this actually is quite similar to any other. I mean, same with .com boom, same thing.
And the ones that will succeed are the ones that build consumer-facing products. And this is what Luca talked about in a recent space. Is he had this great quote where he said that Pudgy's focus, and really the focus of all NFT projects, should be to build a consumer-facing industry powered by blockchain, because there is so much within that. And that's something I think we've really leaned into talking about that since On-Chain Summer over the last few months. And we're going to talk more and more about the future of consumer-facing powered by blockchain. Okay, next up, we've got a Opensea versus creator situation here. So last week we talked about Opensea launched Creator Studio, which we were stoked about, right? A no-code tool that makes it very easy for a creator to mint an NFT collection, to have a landing page to sell that NFT collection, like all things that we believe are so important. If you're a creator, you need to be able to get NFTs into the hands of your community and your fans. And before, like a year ago too, that was really hard. You had to spend a ton of money and resources developing smart contracts, creating a minting dApp, all these things, all gone. OpenSea has made it super simple with their Creator Studio, okay? Love it. But then it came out this week that OpenSea was taking a 10% fee on all primary mints on Creator Studio. Now, look, I don't have a problem with them taking a fee. They should take a fee. They're their business and they're providing an incredible service. Like, that's not free. They need to take a fee. But here's where OpenSea messed up. They hid this. They hid this like deep within their contract code, basically, that if you use one of their smart contracts, they're taking this fee. And so they're not upfront. Like, just be upfront. First thing on your website, everyone wants to know what the price of your product is. Put it right there. Like, don't freaking hide it.
The PR team of OpenSea has just completely let down OpenSea over the last year. I mean, what was it when they removed royalties? They also then added creator fees at the same, or they added platform fees at the same time over on OpenSea Pro or whatever. Which, I mean, again, they should do that, but like they announced them both in the exact same day, which is just like, duh, obviously don't do that. And then this one as well. This has been such a touchy subject. And again, I agree with Jay. This is a massive product. Creator Studio is great. And like without Creator Studio, you have to pay, you have to use so many different apps to create your image, mint it, get it audited, blah, 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 all this stuff. And so this saves you a ton of money. So like charge 10%, no doubt. But why would you not tell people? You already know this is a touchy subject and obviously it was going to come out. Someone's going to figure this out. It's not hard. Just so ridiculous. OpenSea, they're the one marketplace that I was kind of rooting for because just I wanted them not to get their ass kicked by Blur, but like, fuck, they suck too. I'm all Rarible.
I'm still rooting for OpenSea. Just like hire a new PR team. Call it your PR team. Jeez, just be authentic and honest. Don't hide stuff. It's so simple.
Don't hire my co-founder and co-host. He'd be too busy. But do hire your PR team.
At the same time this week, Zora, another NFT minting platform and good friend of the show, love the Zora team. They announced that they have removed fees for creators to mint. So it now is free for creators to create a NFT on Zora. No crypto required. You can just do it for free. Now, here's what's cool about it. So the challenge, if you create an NFT collection, in order to put that collection on chain, you need to pay gas. You got to pay gas to basically set that collection up on chain. And then when any of your collectors collect the NFTs from your collection, they pay gas to move that NFT into their wallet. Okay. And that Zora wanted to remove that first step so that creators didn't have to pay gas to put a collection on chain, because Zora's mission is basically to get to every creator, like every underground small creator. They want to make it really easy for you to move on chain, which is an amazing mission. They're not going enterprise. They're not going after the big guys. They're going after the little guys, which I love. And so what they did was they flipped the script basically. So no longer, if you're a creator, you want to create an NFT collection, you don't pay the gas to put that collection on chain, but somebody has to pay that gas. So what Zora did is they passed along to the first minter. So whoever mints the first NFT in a collection that's put up by a creator, they pay the gas to put that collection on chain. And in doing so, they get rewards. So there's an incentive to do this. They actually get 0.000111 ETH, which in today's prices is like 25 cents for every subsequent mint of that collection. So there's an incentive for you to be the first minter of a collection. You get some rewards.
Look, some of these get thousands of mints, and so that does add up. And at some point also, the price of ETH will go up. I imagine Zora will have to change that. Like if the price of ETH goes up, 10x in the next 2 years, then Zora's gonna have to alter their fees. This is why it's always weird to price in ETH. But anyway, we'll see where that goes. But look, we talk about this all the time of removing friction, and there's a lot of friction in starting in Web3, especially the worst part is getting ETH and then moving it to your wallet, bridging it to the L2. Like that's insane to ever expect anyone to do that. We use Zora, and even us, we were like, this, like it was fine for us. This sucks for our own community. Even though these are Web3 natives that are listening to our podcast and read our newsletter, it still sucked that they had to bridge, 10 ETH from Ethereum just to mint something that was meant to be free, right? And so like it's very odd. And now they're fixing that, which is incredible.
Okay, also this week, Frank DeGods and the DeGods team announced the comeback. And basically what the comeback is, I shouldn't be laughing here, but it's almost comical. The comeback is, so DeGods NFTs have gone through 3 seasons now. And each season, you would think they would launch a new product or something, but all each season was new artwork, right? Which basically is you could change the JPEG of your NFT, right? Which like, okay, cool. Kyle will tell you nobody gives a fuck about the art. Some people do, but it's definitely not a product. And DeGods they got a lot of backlash from season 3, which happened a few months ago, because obviously changing the art of your NFT does not make the floor price go up, which is what their community really cares about. So their community was pissed, right? So now they've announced the comeback. And what they did in the comeback is they reset all the DeGods artwork back to season 1. And in season 3, you had to pay to change your artwork in season 3. So now they've just reset it back to season 1. Now, they also built a new website where you could, if you want your artwork to be season 3 or season 2, you can go into this website and you can change it to whatever season you want it to be. It won't cost you any gas. You can do it for free. Okay, cool that you can like mess with the metadata of your NFT. We haven't really seen another project do that. But yeah, DeGods just keeps making these like big announcements. They're great at branding, the comeback, like this announcement's cool. They made this great video. Don't get me wrong, video hyped me up. Like I'm not a DeGods holder, but I was like, damn, yeah, this is exciting. But then there's nothing behind it.
The DeGods team has just missed the forest for the trees of what NFTs are and what they mean, in my opinion. They have spent who knows how many hundreds of thousands of dollars, 1, changing art, and 2, changing the blockchain that the NFTs exist on, right? They were originally minted on, was it Solana they were originally minted on?
Yep. Yeah.
And then they moved that from Solana to Polygon, and then they moved from Polygon to Ethereum. And it's like, dude, nobody cares what chain it's on. Most people don't really care about the art. And what's hilarious, there's a tweet that came out from Bayer, and he goes, imagine buying a DeGod that hasn't turned to a DeGod that hasn't turned to a dead god yet. Here's what you need to do to make this happen. You got to convert the DeGod to a dead god, mint your tube on Sol, reveal it on Sol, migrate the dead god to ETH, downgrade your dead god to season 3, migrate your Uke from Sol to Polygon, migrate your Uke from Polygon to ETH. He just goes, bruh. Like this, It is literally, Jay always likes DeGods and says that he supports Frank because he is a great marketer. He can get attention. Sure, he can get attention, but he has absolutely no idea what he's doing. Like, just so lost. It's insane. Nobody cares what blockchain it's on for the most part, unless like the thing really matters. If it was, a $2 million asset, okay, maybe I would care. But I mean, he's going around from Solana to Polygon to Ethereum, which are all pretty legit chains anyway. So like, it's minuscule, the difference of that. Do you know what I mean? And then also just these arts, which people just keep complaining about and don't care. Like, it's just like, what are you doing? He reminds me of, do you remember I think it was on American Idol, the guy, William Hung, I'm not sure. He's like Chinese guy who sang, she bangs, oh baby, and she moves. And he was like all weird and how he danced, whatever. And then he became like a star for like a year. He was like a celebrity because he could grab attention. He was terrible at what he did. So bad at what he did that it was funny and that grabbed attention. That's what DeGods is. He is a terrible, Frank and the whole crew there are brutal at what they're doing. They don't understand what NFTs are. They don't know what their business is. It is a joke. And anyone who's buying this stuff is crazy. I'm sorry. But the only reason he's getting any attention is because it's so stupid that people are like, what is happening here? And it gets a lot of attention on Twitter. Other than that, terrible. I would be running for the streets if I had a DeGod right now. This comeback, garbage.
And Kyle coming in with the hot take.
It is. It's probably the most NFT project I've ever seen.
Is garbage in my mind is Blur Season 2. Blur finally this week announced an end to Season 2, which I hope is an end to all the airdrop farming that has absolutely screwed over the NFT market. Blur Season 2 ends on November 20th, and that is, just great news. Here's what happened as a result of Blur making this announcement. First, their token price actually dropped the day they made this announcement, although the drop sort of happened before the announcement was made. The token price has gone from, it was at all times high, it was at $1.31, and now it's down to, 16 cents a few days ago. But what's been more interesting is...
Hold on, one second. For pro subscribers, we put, I forget when it was, back when it was at all-time highs, we had a pro report that we wrote, and I said I wouldn't touch this token with a 10-foot pole. It is going to just go to shit. And I forget what it was at. I've got to figure out what it was at when we wrote that.
Probably wasn't over $1. It was definitely around $1.
Yeah. So anyway, this is why you go pro.
This is why you go pro. So what's been interesting is to watch the marketplace wars play out as a result of Blur basically offering this incentive of a airdrop of a token. They did that in Season 1, and here's what happened. Immediately after Season 2 was announced, Blur shot up to 80%. You can see it. I've got a graph up on screen. They had 80% of the market share of NFTs, like totally taking over. Before that, a few months, like 6 months before that, Opensea had 80% of the market share. And so Blur, an incentive works. We know this. Incentives drive behavior. And so this incentive of an airdrop worked, but the airdrop took so long and there was no announced end date forever that Blur started to lose their market share. So they slowly lost it. It dropped down. It got down as low as like 54%. And then they announced Blend, which is their NFT lending platform. Boom. They shot back up. They got as high as like 73, 74%. And then they slowly have come down since then to like about 50%. And then they announced the end date of Season 2 and they barely shot back up. They shot back up to like 53%. So now with Season 2 ending, here's the question. What happens next? Does Opensea grab all this market share?
I mean, first of all this market share is fake, right? The volumes are inflated by 10, 20, like most of the volumes we're seeing, I forget what the number is now, but like it was above 50% of all volumes are fake, right? They were wash trading and that people are trying to farm this airdrop. So like volumes have already collapsed like crazy in last year. They're about to collapse by way more than I think people realize. And then Blur's market share goes to next to nothing because once the wash trading all goes, that gets rid of almost all of their volume. I wish we had a chart up. We do have some charts that can exclude the wash trading. That's not this one, but I imagine Blur goes down. I mean, the Blur's not gone by any means. It's a great tool for traders, and especially when the NFT market comes back, Blur is going to be an amazing tool, I think. I don't know how they're going to make revenue. They haven't figured that part out yet, but that's not like the biggest concern. They have tons of capital that they've raised. But like, I think one, their token has just been a disaster and sucks for anyone who thought that Blur was going to be good and invested in that. And then two, I think their market share goes down like crazy. Opensea, I think, is the one that's going to take most of it. Although like Opensea is really starting to bug me too. The NFT market in general just really pisses me off. But
I really hope Rarible takes some more. And then I hope more niche marketplaces come out. We need more marketplaces that are focused on a particular industry, because it's so hard to be the Amazon of NFTs right now, because they do so many different things and they have so many different use cases. It's not like a single product. Like, it makes sense. Blur makes sense because it's for traders.
It's a niche tool. Right. And OpenSea probably will be that Amazon. Like, they're so big and so far along ahead of everyone else and so capitalized, because they actually went for years charging platform fees before Blur came and Vampire attacked them, and they had to get rid of that. So like, they made a shit ton of money. So like, I think OpenSea still does well. They still need to fire their PR team and hire new, and then I think they'll do well. But I do think, like you said, niche marketplace, because like, think about what happens when Reddit launches their marketplace, right? It's going to be huge. And then like, for example, DraftKings, when they launch their marketplace, which I assume they will do. And, there's a list of so many other Starbucks and so on and so forth. Like, all these bigger brands that are, putting out hundreds of thousands of NFTs, some of them millions of NFTs, they're going to want their own marketplace, Nike, whatever. And so I think that's where it's going to go. And so I think you're right. Niche ones will take over, but probably OpenSea remains.
Let's jump into some quick hits before we wrap here today. Kai, hit me up with the first one.
All right. First quick hit of the day. Nouns DAO forks once again, and the burn proposal ends today.
So two things happened here with Nouns DAO. You remember they did a fork about a month ago where basically half of the nouns, over 450 nouns, left the DAO in return for getting a refund. Essentially, they gave their noun back to the DAO and they got 35 ETH. Now, once that fork happened, we knew this might happen. Now forks can happen anytime. Anybody at any point can propose a fork in Nouns DAO, and they can leave the DAO and get this 35 ETH back and give their noun back. So it happened again this week. It ended when was it? It ended a few days ago, a day ago it ended, and 69, isn't that funny? 69 nouns left this time. Somebody must have made that number happen. And as a result of that, 2200 ETH was taken out of their treasury, given back. And so the DAO's treasury is slowly going down. Now, why did this fork happen? The main reason this fork happened is because of a new proposal called the burn. The issue that Nouns DAO has is they're not spending their treasury fast enough. And so because they're not spending their treasury, which their treasury was at 25 million before this fork, it'll be a bit lower now, but it's still a significant treasury. And because they're not spending their treasury fast enough, a lot of nouns are like, I don't know what I'm doing here, right? Like, I don't know why I'm part of this organization. I don't know why I'm investing in this organization if they're not actually going and building things that I believe in. So they want to leave, right? Which is what the fork is. So somebody within Nouns DAO, somebody with big balls, I must say, proposed something called the burn. And the way the burn would work is basically, if Nouns DAO does not spend enough of their treasury, and they have like a mathematical formula of what is considered enough of their treasury, then they're going to burn the ETH. Like, legitimately, they're just going to burn their money. And that's basically a way to incentivize the DAO to say, hey, we got to spend our money faster or we're going to lose it. Spend it or lose it. It's like corporate budget season. It's like, you don't spend it by the end of Q4, you lost your marketing budget. See you later. Too bad. So sad. So now here's what I'm confused about. This proposal for the burn has been going this week. I'll pull it up on screen here. And you can see that there's 80 people for it and 66 against it. And my understanding was that this was going to end yesterday. But now when I look at this proposal, it says queued as the status of this proposal. And there's 4 statuses of proposals in Nouns DAO. There's active, queued, complete, and upcoming. And so this should be complete because it was supposed to end. But for some reason, it went into queued. So I don't know if they've like delayed this, because it should have passed in my mind. It should be complete. There's 84, 66 against. But yeah, clearly something is going on their end. I'm not sure. here's what I'll say. I got a lot of respect for NounsDAO. These guys are at the bleeding edge of experimenting of what it is to run a DAO. So I have nothing good but to say about them in terms of that. Like, respect that experimentation, especially when it's millions of dollars that you're experimenting with. But I'm also not surprised. They're going to face a lot of challenges. DAOs are very difficult. We've all talked about that. The challenges of running a DAO, the challenges of bringing everyone together. So I would continue to follow NounsDAO. But if you are an investor in NounsDAO, I don't know what to say there. Okay, next up, Pokemon physical cards from $300 to $5,000 profit in one day.
And he's talking about on-chain Pokemon cards, which we've talked about Courtyard previously. They're a app that's on Base, where you can basically take your physical cards or packages of physical cards. You give them to Courtyard. Essentially, they use Brinks in a secure way to vault them, and then you can basically trade them on-chain, which is really cool. So it's real-world assets, not in the financial terms that we think of, like real estate and equities and stuff, but just in cards and collectibles, which we think is going to be really big. So last week they did a drop, and when they pulled out what was in the collection of cards, there was what they called a Grail, which is it's actually a Mario Pikachu, which is kind of sick, which is a Pokemon card from like 2016 or whatever. Anyway, they immediately get ownership of it. They can put it on the marketplace immediately and sell it, and immediately they put it up for $300 and it sold for $5,000. So that is pretty incredible. You don't really get it without blockchain. That just can't happen. You could get a package, you could pull that card, be like, okay, this thing's worth a lot. You got to go then get it appraised. You got to find a way to like secure it so it doesn't get ruined. You can put it up on, let's say, eBay. Maybe someone buys it if they trust you, and then like somehow you got to get it shipped over there, and like that's going to be a lot of fees associated with that. It's not so easy. But it's all done for you, and it's all done on chain to make it seamless. So pretty incredible, actually. And so I think we're going to see a lot more of this. I got a feeling Courtyard goes real big soon. And then secondly, in the realm of tokenized collectibles, real world collectibles, another company called Collector Crypto, I think, just launched as well. And they're using Magic Eden as their sort of marketplace to sell them, but it's on Solana. And so it's somewhat like Courtyard, but on Solana. I was looking into it to get more details on just like how it all works and functions. There's not much. So I don't really know like all the details to it, but either way, they're selling, a bunch of Pokemon cards as well. And they're doing it through Magic Eden, which is cool. And it's on top of Solana. So this is becoming a big thing. And I think we're going to see this just grow and grow and grow. So very interesting to see now a competitor of Courtyard already, which Courtyard just launched not too long ago too. So this industry is moving fast.
This is the trend we're seeing right now with consumer apps. So we're seeing the same thing with FriendTech and SocialFi. Consumer apps launches on one chain, and then it gets forked and launches on like every other chain in the exact same way. Like, I don't know if that's a good thing or a bad thing. I guess like competition.
Great thing. Competition.
So great. But the fact that it's on different chains is so funny to me, because we keep saying this. Chains are going to be abstracted. Nobody's going to care long term what chain you're on.
Yeah. I don't know why people think that's a competitive advantage. I mean, it kind of is right now, because we're dealing with just the existing, your existing user base and the existing liquidity. So like going where liquidity is, of course, makes sense. Eventually that will matter. But also this competition is going to force bridging to get better and better and get extracted away. But anyway, next up here, Starbucks Odyssey sells 5,300 stamps at $20 a pop.
Yes, Starbucks Odyssey just crushing it in the background, like still in beta, still a closed ecosystem. Slowly, from what we know, they are slowly growing their Discord and slowly allowing new members in. But at the same time, they continue to sell digital collectibles through their program. And they did their most recent collectible, which was PSL, right? What is PSL? Pumpkin Spice Latte season, everybody. Yeah. And everybody loves pumpkin spice lattes and loves Starbucks. And they sold 5,300 stamps, digital collectibles, at $20 each, which is amazing. As far as I understand, there is some utility to these stamps. You also get points when you buy stamps, and then points can be redeemed for other things within the Starbucks Odyssey program or platform. But mostly these are just digital collectibles. It's incredible. Like Starbucks, anybody who has a business and is trying to figure out loyalty, go look at what Starbucks is doing, because they are certainly leading the way in the way that they have built this slowly, step by step, and engage their community around having fun buying digital collectibles.
Jay, when we did our predictions article at the end of last year, I think you said that Starbucks was going to onboard some odd million people.
I think I said like, no. I said 5 million. I said it would onboard 5 million.
I mean, hey, they've done a great job, but not quite those numbers yet.
I need them to go out of beta. If they opened up, they would onboard 5 million.
Imagine they did that
30 million in their loyalty program, their Web2 one. So
imagine they just did it like in December and just ripped it up to 5 million real quick for the end of the year.
That would be real
for you. Life prediction for the end of the year.
Okay, next up, don't store seed phrases on password management tools.
Yeah, this is a PSA, public service announcement. This flippin.eth lost 20 ETH overnight last night from their hot wallet. And the reason is he stored his seed phrases on LastPass, which is one of the password management tools. There's 1Password, there's LastPass, there's a list of them. But anyway, what's interesting is he actually doesn't even store it on there anymore. He had it on a long time ago. He deleted it because he was like, oh, this is a bad idea. And somehow someone was able to hacked it and it's still in the database somewhere. It deleted from his point of view, but it's still in LastPass's database. And those were hacked. And now it's stole as well. There's actually another one. I sent this over to Jay last night. There's another guy, same thing. He's like, I deleted mine forever ago and it's still got it. So not only don't store them on there, but if you ever have, get that shit out of your wallet and get a different seed phrase and write that seed phrase down and put it in a vault. I know that sounds weird, but this is what we have to do right now until we figure this stuff out. It was funny. Heather and I are traveling next year a little bit. And so she was asking me if she should get a travel vault. And I was like, oh, I have one. She's like, what do you put in it? And I was like, well, like a couple of my business credit cards that I don't walk around with, some currency of different countries that I've been to. And then mainly it's just a bunch of seed phrases. And she's like, seed phrases? What's that? And I was like, just going to roll my eyes. I was like, I don't know. I got about 25 pieces of paper with 24 series of words on them that store 90% of my net worth. And we were walking, she just looks at me like, what? Don't worry about it. So as weird as that is the solution. Don't put them in password management tools because they're in centralized database. If they get hacked, they can attach your name, your email, whatever to that, but they don't even need that, to be honest. They just can scan it and go, is there anywhere that there's 24 random words listed together? And they can pull them, they can steal your assets right away. So get them out of there. If it ever was in one, get rid of that wallet, move the assets.
I can't wait for the day when we don't have to deal with seed phrases anymore. It's going to allow a lot more people to onboard in the space. And thankfully, there's a lot of companies working on those tools, making that simpler. We've had so many innovations happening there. That's a wrap, Kai. What a great show. Another great week in the Web3 world. For everyone who's not feeling good about it, I hope you guys feel good after you listen to our show because we certainly are very optimistic. Make sure you check out today. We didn't even actually talk about this earlier. Today, Kai wrote a great pro report on Uniswap value accrual. Super interesting. We're actually going to talk about it a little bit more on our show next week. So tune in next week. We've also got an awesome interview airing next Wednesday with Privy, all about account abstraction, embedded wallets, removing seed phrases, all these things, how we're going to make consumer apps easier for new users to use. We'll see you guys all next week. Have a great weekend.
Thank you for listening to Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. If you enjoyed this episode, please share it and subscribe or follow so that you don't miss the next one. While you're at it, there's a link in the description for our free newsletter where we provide timely and relevant Web3 insights so you can confidently build and invest in Web3. Make sure to subscribe today. One final note. This podcast is for educational purposes only, and nothing we say is financial advice. Crypto and Web3 are risky, and you should never invest more than you're willing to lose. Thank you, friends, and see you in the next one.